Evening, everybody. We're on Discord talking with Scope about smart money. So I'm going to push it over to Scope.
Screen on now.
Sorry, Scope, just bear with me. I'm just putting up your screen on YouTube.
Yep, it's on.
We can see it, yeah. Perfect.
Right. Is it on? Yeah, you can see it?
Yes, absolutely, indeed.
So, evening, everyone. Today, I'm going to be taking a look over an indicator that's started to get coded by David and go over a few positions and something else I'm working on to go with this smart money strategy for the trades that you miss out on when it doesn't retrace. If you follow the strat, when it doesn't retrace to your levels here, and there's quite a few, and you miss them by a bit, but you've missed it, and that's it. It's done. It's gone. You wait till the next sell. So, first of all, this is going to be it's going to be something that obviously everybody's familiar with, and I plan to put all the information about it, as I've done with the smart money concepts course in my channel. I plan to put it all together, and you can add them both together and work together, or you can just use this on its own. So it's just a quick preview of it. So, and I have been trading FOREX over the last so many days, and I've gained decent, well, I won't say a lot of money, but I've gained a decent gain on account over the last I think it's 14 days now. I've lost a couple of trades by a tiny bit, but the losing trades still. So I keep seeing people on YouTube. I watch a lot of YouTube, and I watch a lot of people trading and follow a lot of people. Just it all seems the same, but they have different words and different meanings and different names for it. There's people now I'm watching, and they're saying, "Oh, well, I'm going to combine this and this," and we're the first people to do it. They're not the first people to do it. Everybody does it. We all do it. So this is going to be like, I've mentioned it a few weeks back. It's going to be like smart money, and implementing like retail traders. I don't know. I don't like saying it because we're all retail traders at the end of the day, but smart money concepts and retail trading. And there's quite a few ways to go about it, and there's a few different options I could do, but I think this one works the best. I've already spoke about it briefly to people. So what I'm thinking of doing is, this is USD JPY, by the way. So what I'm thinking about doing is, I'll show you now. So we're having if you're following the smart money concepts, what I do, so you're marking out your structure on a higher time frame, like the 1 hour, and then dropping down to the 15 minutes for your entry, maybe dropping a bit lower if you to find a better entry. 15 minutes seems to be fine for me. So this is the area that needs to be broken in order for this USD JPY to turn back to a downtrend. Obviously, points here continuing. So this point, you need to break this to continue in movement. So you would be expecting from this, if you just got in the market at this point, you would be expecting price to come into this area. Doesn't, just showing you. You'd expect price to come into that area for obviously a good buy, decent cheap price to buy. And I'm not going to drop timeframes right here because it's an headache to try and scroll all the way back. I'll drop timeframes in this bit. It's closer to the price because it's easy to follow. So this obviously has failed. This would be your POI for a buy to carry on this structure, because you're expecting now, because you've continued the structure. Let me just delete this. Because you've continued the structure up here. You broke this, it's pulled back. This is pulled back to a decent area. Pulled back to below the 50, just to around the 61 point. So not in level that you would, well, you could buy anything below the 50. You could buy to if you got an entry right to get the price to break this CTS. But obviously, it didn't come all the way down, but come to this covered zone. So now, when it's done this, it started pushing up. It started pushing up by these candles here. So then that's the reason you can mark this out as a breaker structure, because this is a push up already. Just mute my phone a minute because it'll just do me head in all night. So this can be marked out as a confirmed low. So you can mark it out as a breaker structure. So price doesn't break that, you will be looking for price to break that. But it did break it. So now the next point is, you've got this next level here. So you've continued, you've got this next level here, but this breaker structure is still the valid breaker structure, because obviously we haven't come down and new low in yet. So now we start to pull back down. And you would have an alert set here to alert you for you're coming up to a point of interest. So when it hits that area, you could then be dropping time frames to the 15 minutes to find an entry. If you get if it comes down and you get a bounce off of it, you'd be looking at another breaker structure on a lower time frame, and then looking at getting in around here for it to then break that again. But as you can see, it's piled straight through. So now, obviously, we're not CTSing, we're not putting in a new low, and we've broken structure here. So now, obviously, this is on the hourly. So now you're going to be looking for anything really. You just know we've broke the structure, so there's a good chance now that we're going to go into a downtrend. So now you can be looking for, now it's broke here, you can wait till you get in like confirmed points, confirmed lows. You're waiting for a pullback. So when you're seeing multiple push like this, these ones are not significant enough. They're not. They are mini pullbacks, but obviously this is a range bar. It's not doing anything, and it's not pulled back any significance. So what you can do is the last high, when you're seeing this little push up, so the last high, these two candles here, Marabuza, engulfs that one. So zoom in a bit so it's a bit easier to see. So this is obviously it's a down candle. This engulfs it. So, and then you get multiples one after. So now you can be confident that this is the lowest point, and this is where the pullback starts. Could say here, but at the same time, it doesn't matter if you think that's going to be one, because if you notice this area, just mark this area out. If it just drops straight back down, then you've already marked this out and set alerts here. It doesn't really matter, because look, a lot of the times the box is the area is still around the same area, so it doesn't really matter if you've got alert sets here. You're still going to be looking at this area anyway. So you now have this, and you're hoping price would be pulling into this area, but it doesn't. So that would be, then people would be thinking, well, I've waited a long time for this to pull back. Hours, waited for it to pull back up. It's not pulled back up. So now this is what I'm working on now, and I have took courses in it. I've took 2 courses in this specific style. This is smart money, and what I'm going to show you is to complement this smart money strat, so you don't miss out on as much opportunities. So, and it's all in the works at the minute. So we've not reached this 61 here. Just want to put it there. It's a bit of an estimate. So we've not reached that area. So what you are going to be doing then is, when you've got the full pull, and you get these multiples engulfing, and then multiples all after each other. So you're just going to be using your levels. These are just like your stuff. So this is going to be level cells, because that is the highest point. It's not reached our point of interest or 61 to 80% fib level. So know that now. So now you are still following the breaker structure there. So you're still following the rules now, but obviously instead of it being above CTS, this is now below CTS. So you're still combining this strat with this strat still, just by following like this. And now obviously this pullback up here, you've marked your key level out on the hourly. So now this area becomes now for the structure. So now that becomes your breaker structure, just flip side. So CTS is above in an uptrend, POS is below. Downtrend, CTS is below, POS is above. So we've not reached it there. Also, mark out your key levels on each area. Because obviously if there's sometimes when price blasts straight through your sometimes price blasts straight through your POI, so price could have then from, I don't know, just say this, there's a POI here, you're waiting for this pullback to come into this POI. So this is just like, these key levels are just to complement it and just to back up your strategy and to back up this POI. So this is just say this would be sell in the hour, because now we're in a downtrend. So this is now your sell point. This is the area you want in price to this pullback to come into, to then look for sells. Obviously it doesn't reach, but while you've pushed down, mark the key level, mark your POI. So smart money, just your usual levels. So keep this on chart. Obviously, and you keep your on chart because they are still relevant while ever they're not hit, and there's imbalances as well. So we all know imbalances tend to get filled. So you would be expecting price to here at times. You have a little small reaction when you're expecting decent. You have a little small reaction, and there's not enough power in here. Push it down. Sometimes it just blasts straight through. So that's why the key level is there for if you're just following one strat. You need to have multiple, I think, multiple like entry criteria or multiple ways of trading, because you're not always going to see this pull back to 61.8, and you know it's not going to work every time. Nothing works every time, but you're just trying to give yourself more opportunities for missed trades or market conditions not meeting your requirements. So, as you can see here, you are hitting your key levels. And obviously, there's sometimes key levels, just if this was a key level, it'd be massive. So you would have to either skip or wait for better structure or smaller time frame. But a lot of the times, key levels are really small. And if you put short on here, you'll notice that your stop losses are also still as small. 0.24, mind you, that's FOREX, but it's still not massive. So when, like I say, when these POIs fail, you just follow it through and you just mark your key level. And you notice all the time, a lot of the times, your key levels are hit rather than your POI. When you miss POIs, if the pullback don't come and hit your POIs, you've got a key level marked already there, and you're just waiting for this to come and hit one of these keys. Now there is, I'm just going to go over this, not in massive detail, but see enough detail for you to get the gist of what I'm going to probably be putting in the group future. So and learn this as well, and the same thing. Now there's different ways to mark out your key levels. Also, that's another stream or something like that. So when you've got your key levels marked out, you can do your entries on these. They're just as good as these. Obviously, this isn't out going into detail. This is just the start of what I'm going to be. So you've got here, you've got just broke down. It's come back up. It's tested your key level, and you can if you want to, you can jump in. This is just quick work. It's not, like I say, it's not in detail, so don't. It's just this simple. There's a lot more to it. This is just a quick and easy way, just to show people. So you can easily target your recent, and structure won't always be tiny. You can easily target your last structure. There is other ways. I drop timeframes and find different ones, and you can get different. You can get smaller key levels. Like obviously, same as this. You go on an hourly for the smart money one. You go on the 4 hourly, the hourly, and the 15 minutes to refine your entry. And then this is the same. You go on the 4 hour, the 1 hour, and the 15 minutes to refine entries. So these key levels are just there for backup plans. If price bounces straight through that, you've got this one as a backup plan. If price doesn't reach that, you've got this now as next plan. But you're always marking out your structures. So obviously you're just following your strat. And now here we are on this. So we have here, that is now CTS. So if you are following smart money and not key levels and you miss this entry, so now this is your next opportunity, because you have the same kind of structure. This is your CTS. Broke that. So now this becomes you. Well, you can leave the BOS in the same area because it's not broke it. This one, it's only just wicked above it, and this is not a real break. So you can potentially leave it same position, or you can just move it if you want to put it there. But you're always going to be following chat, so you know. So now we go on to the next point. You've missed this one. We're going to the next point, but you've got your key levels. If you would have traded like these, you would have had, you would have been in the trade already, probably. But without refinement, I couldn't really tell you if you know, you would have. You had one here, not so much. One depends if you would have refined it by now into a lower time frame and got a smaller key level. So now we've started pulling up. We've put a low in here. Now we've put a high in here, a new high. We've not broke the structure. We're still waiting for the structure to be broken. So anything between this and this, just range. You can trade ranges, and I've got a perfect example for you in a bit. And this is with key levels and smart money involved. So you've put in a new high here. So now your structure is like this. But obviously this is the high. You might think, right, well, cost price didn't reach this POI from this. might be reaching it from this. But obviously, like I said, we haven't done a valid break of that. There's the close. So now you know that this key levels, you're not going to reach that anytime right now. So all you can do is follow what the market gives you, what opportunities the market gives. So now we've got the CTS. So now we're waiting for a pullback to start, and then we can fib this area on the CTS way. So if I just go down a bit, got a massive candle there. Also, re-update your key level. Obviously, because now we've got the wick above, whereas now that this one's all played out, it's still valid. It could still work again. We keep updating them. You're always following market. So now we're starting this pullback. We can now fib this area. Oh yeah, there we are. Massive candle there. Multiples. There's multiples here, but if you notice, they're not breaking each other. Kind of all like levels. So I won't see that as if it were just all them, I wouldn't see it as same as these. I don't see these as just. So now we've got our new continue, because we know now that the pullback is real. And obviously the breaks still good. So you see here we've got, this is your zone that you want price to be put into for the smart money concept. And these are not what you're looking for, an opposite candle to the way the market's trending. So obviously we've got this one and this one, but if you notice from PDFs, you cannot have, you don't want a pin bar or doji candle as your IC. So now what we can do is we've got the area, we've got the pullback started. We know this is a genuine pullback. We've got a massive push up, caused imbalance. Imbalance got filled, it's pushing back up. So you would expect price to be hopefully moving back up to try and get in with smart money. If all else fails, you've got a key level marked out also. And obviously it's structured also. So we can't identify a decent enough candle to mark out as an hourly POI. So what I've been doing, well, what I do and what I've done from the start is I drop timeframes, and now we see this nice, beautiful candle here. It's a perfect area to mark out for your smart money concepts. So it's there. So now you're waiting for price to come into this area, or this is your signal, so you would have the alert here, just to tell you that obviously price has reached your POI or it's just about to hit. So then you can see what happens. So if we go back to the hourly, we have that marked out. We're waiting for price to reach. Which is there. So now you can enter on these. We've got massive bearish move. You can enter on these hourlies. If you was going to enter on them, just fib it. To just below 30. In any wicks, maybe. Either targeting recent structure. Obviously, you're in the downtrend. This is the pull up price to break. If you would have got in there, you've got to target it here because you would expect price to be going down to there. Same as this, if you would have been in here, you would have expected price to hit this. Or you can just target structure. What I've been doing instead of joining, well, what a few of us have been doing, and this doesn't happen every time. Sometimes it hits your hourly POI and just flies straight down, and that's it. Nothing. Unless you enter on it. But I've been dropping time frame. Remember, we've still got key levels marked. So I've been dropping time frame. So now we're on the hourly. It's hit the hourly POI. So once it hits here, the first time it hits your POI, you are going to then drop to 15. And you're going to mark out your breaker structure. As you can see, the structure here is just like now that is a pull handles straight after one another. This is a range where the high, low, mark out, doesn't really do anything, it doesn't really close out of range. So it's not really, it's not pullback. You see this is a high, you can see straight up. Then it will pull back to this area. So you can see it's definitely, this is the structure. Now your setting the alert on this structure. And watch this in the 15 minutes. So you broke it there. Now you're going to be waiting for a pullback, just like we waited for a pullback on the hourly up here, and just like we waited for a pullback on the hourly here. So now we're waiting for a pullback. Pullback starts. And there it is, imbalances. Even if this is, obviously, like I say, this is a doji. Pin bar, you can't really have, can't really count that as anything significant. From top here, it doesn't really move much. It does do multiple candles here, but it started off doji. Whereas when you come down here, this started with strong candles, strongish. and then we get multiple all at once and imbalances. This is all wicks, just range. It don't, there's buyers and sellers at the same time. Price doesn't want to make its mind. Just stuck between the open and close of a lot of candles there. So we don't count. If you did mark it, you would have still been in the same position because you got just above. But so now we've started the pullback. We see this candle here. It's in the 61.8, but it's not. Obviously, with the candle, it's not a candle used. So again, time frame drop. Instead of 15 minutes, we're in the 10 minutes. It dropped to the 5 minutes. And this is the area. You can see this is a stronger candle. So you're marking this out with the wicks. Too many. So this structures or something. So this is obviously how I'm for. This is how I am aiming for my smart money concepts, but actually I'm having key levels marked out as well when these fail. I'll show you examples that I prepared earlier. There you go. It's hit your target. Go while you marked out on the 15 minutes, very top. Your stop loss is just above. You can even put your stop loss, your entry at 30 and get a better risk to reward. But if the candle's small, you will get obviously a better risk to reward. So this is on the hourly, and this is now on the hourly, but we come back to the 15 minutes. So you can target the last structure, or you can target next structure, obviously, or target where you want. It's up to you. I try sometimes target just below there. Doesn't always hit. Safest option is structure. You're still getting good risk to reward, but obviously these areas are even better. So if you was aiming down here, we'll just see what happens. Or not. No, you failed it. So what happens when if you didn't target that recent structure? If you didn't target that recent structure and you targeted this structure, obviously it's a lost trade. But you're targeting structure, it's a win trade. You're targeting there. What happens when your eyes fail? Obviously, this can come up and test this again. You can just do the same process as before. When it's hit it again, drop down time frames, and see. But obviously, the more times it gets hit, the weaker it's going to be. And a lot of people do it different ways. If it's been hit once, they don't use it again. There's all different ways. I've seen that many people trading, watched that many people trading. They have different ways. And just give me 1 second, I'm just going to get a drink. So let's just say you failed because you wanted to be greedy and take this structure or this structure. Then you have key levels. Have key levels to fall back on, and hopefully, if you're failing this one, if you've took profit recent structure, it works on crypto as well. So obviously you're going to have different moves and bigger percents gains. So you fail. It just say you have targeted that, and this has failed. Come down. You're thinking, yes, I'm in a good trade. Maybe you would have waited for like a lot of. Maybe a lot of the times, what I do is once it's hit, I drop down into 15. Right, so now this has entered you here. I'm just trying to quickly tell you what I do. Just for my manual trailing stop. So you look for the lows before it. So obviously this is a low before it. So I normally see when price breaks this. That's when I normally move my stop loss when price breaks a low. Could have been this one. Could have been that low. When price is breaking each low, you can move your stop loss. But I wait for it to break a significant low. And this to me is the most significant low. So that's that. These structures here, the trade hasn't done much yet because you're not going to get into the trade and take profits here or move it or whatever. So I like to let it do its thing, see if it works a bit, see if it moves in my favor. And then obviously I'm waiting for a significant low to be broken, this one or this one, any of them two, the significant lows, and that's where I would want price to break before I moved my stop loss either to break even or to either move my stop loss to break even or to it's been broken here just to the last high or just wherever it pulls to. Every time I've been getting these little mini pullbacks, I've been moving my stop loss in, but that's just how I do it. So target down here and that's failed. So now you've got a key level to back, and you can back test this yourself, and it works quite often. So prices hit that again. You're expecting a reaction from it again to see if you can get in again. Does have a little reaction. So this is the first reaction. Just upon that one, come again. You've got another hit. So now you can hopefully drop again to the 15. Hit again here. So that would debatable that because that starts with a pin bar, but you could mark that or structure on the also
Alguém quer boleto.
also update your key levels. Started the pullback. No candle here. Drop time frame. No candle there. Drop time frame. Little thing, a little one here. Is it to you if you want to try that? Me, I like to see something. I like to see something a bit cleaner. I showed you in the last one. Something like that. I like to see a like that. My so there's nothing there, but you've got your key level marked out. Just say you did take that. Even lower time frame. You put 10 minutes, maybe. It's to there. There's a whole little area there, but it's all just ranging. Try it, but the lower time frame signal me. So have it signal out. So now this key level, the hourly, this one's failed. This one that's not been touched. Still liquidity up here. See this area. Your key level, it bounced through your key level, but it's gone back down through to retest. Mark that out. Good. But obviously, when you're dropping your time frames for these key levels, I've got here. This one here. And then you can drop your time frame. Look for other levels. So when you are waiting then for the retest of it, something coming close to it. This one be an entry, come back down again. Structure's not being broken, still intact. False breakout of that structure, one candle, straight bearish. Show you better examples, but you can get in on these small ones on the 15 minutes. and that's if your POIs are failing on. That's if your POIs are failing here. You have a key level to back up on. There's your key level for the 15 minutes, what we put on before. This is why it's come up. It's done a false break. It's not broke the structure back up. This is your main structure. From here, we found the 15-minute key level there. We found the 15-minute key level there. We marked it out. Then you can target these areas, because this one was the first one. This one was your smart money one. It failed. If you would have took that to there, obviously you would have won. You would have won the trade. But a lot of people want this, and that's why you're implementing your key levels with your POIs, because when one fails, another one goes. Same as this. This, it came back and touched your POI again on your hourly POI after this one. Then you've got in on this one, failed, come back up again. It's tested the POI 1 hour for the second time. So now you're waiting for this break. You've got this break on the 15 minutes. It's come down. You've got no candle, what you can get into there. So if you would have took the 15-minute, if you remember, the 15-minute was just right here. As if you would have took that as a POI, you would have failed. And to be fair, if you get, I think anything above the 80, it's I don't think it's a good time to. I don't think it's a good time to try and take one. A good area to try and take one in this area. Same as it's not good to take a trade in this area, because obviously when it's only pulled back to the 30, it's not pulled enough. When it's pulled past the 80 to 100, it's pulled too much. So that's that out of the window. So then now you've got your key level strategy. So, and I did mark this key level out. I've got specific ways how to mark these out. This one is, let's see, edit price push. It's this candle here. So the key level, you would take this wick and this body, this wick and this body. That would be a key level. So then obviously you're dropping time frames when you get to here. Drop into the 15-minute. This is obviously not the same. You don't have to fib anything. You're just literally looking for key level. So your hourly. This one, level. So you've got it come back here. It's come back down, and you're waiting for like this as opportunities to get in. So this key level is from that there. What I'm marking there as a key level is you've got a pull up, a pullback. Sorry, sound like a buddy business man. So got the pull up there. If you've got wicks above, like this one, if you've got wicks above, this is already marked now. This is your first one. If you've got wicks above it like that, then you would mark the wicks. And if this body is bigger than that body, you mark 50% of the body and the wicks. So you can have like, there's different ways of marking different key levels with what candles you get. Obviously by reading the candles, that's how you do it. So you could easily, when you've come to here, you could easily set false break here. This is your break of structure line from your smart money concepts trading. You've broke, come back down, you've bust through the key level on the 1 hour, but it's come straight back down. And look how many candles have come down, leaving imbalances, which is showing that there's a lot more pressure at this area, or well, all this area, than there is buying at that time. Obviously, if you're looking at it down here, you'd think, but you're following the market. So notice when we are doing this push up, notice the wicks. Notice there's no underneath wicks. There is, but not much, not big. So there's hardly any underneath wicks. And if you notice this size of this, leaves a massive imbalance. There's an imbalance. It just leaves imbalances all the way up. So these imbalances have got to be filled. It's just it's a bit like your smart money, but you know imbalances are going to be filled. So you've got this level marked out, and if you've got wicks as well, you can. I'll show you examples of this from earlier what I did, and if you wicks as well, you can double the thing for safety because you've got a wick here that bounces straight through. But you can easily now, if you obviously if you would have set same as your POI on the 1 hour, if you would have set a limit order to buy here on the hourly and stop loss just above. So that's why you're dropping time frames again, because now you know you've come back through. And a lot of the times what price is doing when it's coming to these areas is if it breaks through, it normally comes back to retest and then goes. So that's why you can set limit orders, but obviously, like I say, when same as your smart money concept, when you'll get your POI on the hour, so you've got your POI on the hour, you can enter on this, but nothing's confirmed yet. You haven't got a confirmed trade. You can do it, and this one would have resulted for a win. That would have resulted for a win if you would have chosen just to hit structure. But you wait for this one. It's a double confirmation, and you wait for this break of structure, sorry, or you wait for the second, the lower time frame. So then you're all marked up to you're matched up with the high time frame. So when price gets to here, this is you can mark this out as you see the massive bearish. So you mark this out as a key level. You've hit a key level on the hour, gone through, not broke structure, it's come straight back down. And if you remember on my last video I did talk about the breaker structure and you bouncing off the breaker structure. And that's for your smart money concepts, but obviously this is just to go with it. So you can now, you're pushing down, you can easily now, because you've pushed down here, you can set this. You look at the stop losses for the sizes, it's the same as the POI on the smart money concepts. So now now you can target these lows, or you can target you was going to target in the first place. We've not broke the structure to the up. Probably break a structure. So you're expecting price to come down here. Or what you can do then is, you've got your key levels here. What you can do then is H. What you can do then is easily mark out or other key levels to take where you could expect price to probably reverse or hit in order to sorry. Jesus. I've got too many templates. So you can think about taking it's down to here. The bigger the target, the more riskier it is. The bigger the draw, riskier it is. So it's entirely up to you what you do. 56. If you're aiming for the bottom one, it's 56. But this is on a 4-hour chart. Obviously, the entry is on the 15-minute, so you can either do the 4-hour chart, or you can do the 1-hour chart. Do the 4-hour chart key levels. You can do 1-hour chart key levels, or you could do structures. But it's up to you. But this is the CTS. Obviously, we're expecting price to go down to there. It's not broke structure cleanly. This is obviously a new structure now because we put this new. It's not that one either. So we're just moving the structure, the main structure. So, and obviously your stop losses are minimal. These. There's obviously time to get stopped out. There's other entries you could take. To mind at work, but you can get the gist of what I'm trying to put into the POI strat. Obviously, it's come back up, and it's respected the level. You wouldn't think it would, but it did. So you could easily you can hit these multiple times. So this is your first one. You've hit it again here. You could do what you want. You can have the stop loss however big you want it. I tend to, like I say, there's different ways to mark out your things. This is how I have been marking them. There's multiple ways to get in, and I'll show you in a minute. There's a lot of times that you hit this. You could hit this 3 or 4 times. You could hit it 5 times, 6 times, 10 times. It just depends. It just depends what, obviously, what buyers see. What if you're seeing this and this, you can expect other people to be seeing this. If you're seeing this POI and that POI, you can expect other people to be seeing it. So you can expect people to trade in the same way as you. But yeah, if you use this key level strat in with your smart money strat, when you're failing your smart money strats, your key levels are your backup plan, and they usually work quite often. You can see this one, obviously that stop loss there, obviously with this trade, it would have been hit there if you would have just tried a tiny bit more stop loss. There's other ways to do it. This is just a quick scene on the chart. Same as you can just target your levels, or it's up to you. There's no rule set in stone what it can be done. But when if you break the key levels, they also do get retested quite often. Yeah, just a key level, just same as your order blocks and stuff like that. They're all over the place. You can have them everywhere. Obviously, every time prices go in like to these, so this is why it's good to put in with your smart money trading, because when one fails, another one can happen. So, for instance, this one is this one. So, for instance, you've got this one. You've got a massive bull from a thing, from a bullish run. Then you've got a bearish candle, and it's a pullback. So you can say now this would be your key level without using the POI strat. So the wick and just that body, and you can see they work quite often. And like this one, obviously it's come down. This, you've marked it out from, just say the price was only here. You've marked this out, this candle, this candle, this candle, this candle. So you've marked this out like 2 hours before this happens. So you've already got that marked out on chart, and you just carry them through. And you'll notice that you have multiple times to get in on a key level strat. Across the board, 2, 3, 4. There's 4 options to get in there. Like I say, when you combine it with your smart money concepts, can be pretty powerful, and it can help you to find your targets or your TPs a lot better. It's just another thing to add, and obviously if you do well with that one, with smart money, you'll do well with that one. Obviously this is a 15-minute time frame. This wick here from this bearish, that would give you, on a lower time frame, that'd give you an entry on your smart money. So that would give you an entry on your smart money concepts. But because you've come up, you've marked this key level out. This is your smart money concepts. This is your key level. So it works all over. Just say you enter on the just above the 30 level. Stop loss just below. Obviously, when you're coming into a key level, then obviously that could be your take profit target. Obviously, this is a bull run, so obviously you're going to be looking for buys at this point on this little bit of chart here, depending on what time frame you're trading on that. And you've marked, or you don't have to mark all your key levels out, but you've marked this key level out just for this purpose. And you can see, why would you want to try and hope price goes all the way to this area, to this 61.8 area? Why would you try? Why would you want to risk? I mean, you can leave money on the trade, but why would you want to try and risk that when you know there's a key level here? So, I mean, it's up to you what you do, but obviously on a bigger time frame, just this much move would be massive on a bigger time frame. So it makes more sense to add the key level strategy and use these as targets. If you're getting in here, you're going to be targeting this area. it's better to be safe than sorry, or better, you know, it's just a lot easier. And the risk to reward on this, even though you're on a 15-minute time frame, the risk to reward is still 5.2, which is all right. It's still, I know we're on USD JPY, but it's still, it's still a 5 risk to reward. So, you know, it's still a decent enough. Sorry, it's not. It's probably about 4 something. Yeah, 484. So you're just under 5 risk to reward. So, you know, if you're marking key levels out as well as your thing, as well as your POIs and smart money concepts, then obviously you are going to be in a better position to take profits. You're going to trade a bit safer, or you're gonna be able to see a lot more clearer the path you want your trade to go, or where you want to be collecting or taking your money out of the trade. So just go on to, I've got one on crypto here that I will show you in a second. But obviously, when you're marking your, should be red in fact, sorry. When you're marking your key levels out, you need to know the structure first. And it's always good to have it marked before you start the analyzing. Well, when you start analyzing, it's always good to have it marked up, because then you're going to have an easier time trying to collect your money. So then obviously when you go into the bottoms, you can see straight away, you can see this, then this ends then, but it hits again here. There's just bits of key levels all over, like this is a key level. Different ways for different. There's different ways for different candle patterns to mark the key levels. Obviously, a buy. Obviously, your little break of structure here. Minutes. 50 minutes. Key level. So there's no balance there at all. So if you notice from my course, and if you've looked at my PDFs enough, or you've spoke to me enough, you'll know that when there's no imbalance, use key level or the break of structure, area. So this is a break of structure to the 0.15. You didn't CTS there, that's your CTS. You didn't CTS, but you broke the structure. So now that is a new break of structure. That is continue the structure. So what you can do when you found this break of structure is then mark out obviously your key levels. They're not going to be perfect every time, but you can mark out your key levels to each area. Even though this one's not being hit, like as it's gone straight through, but it's still a key level, because obviously you're wanting this area now is to be CTS 15 minutes. This one, that's 15 minutes. So you've got your key level on the bottom and you've got your key level on the top. So what happens is, broke the structure, no imbalance in this wave. Now, if you were only trading the smart money, what I've done, you wouldn't be in this trade because it's all about imbalances. It's not all about imbalances. And don't get me wrong, the smart money concepts strat can still work because you have this here. Obviously, this isn't a candle you would use. You'd drop down time frame to get a better candle, but it would have still worked. You've not got to close below it, but this wick would have probably taken you out. Obviously, it can still work, but with imbalances, you're going to get more wicks and stuff like that. So when there's no imbalance in the waves, if you're just using smart money concepts, you would skip the trade. If you would have tried to trade this one, it would have stopped you out. So that's why when there's no imbalance, you use the breaker structure line in smart money concepts. And if you notice in my course, it's one of the last few things I've been saying because I'm wanting to add it. It's a key level. So if there's no imbalance, you use the key level and the breaker structure. That's what that's the area you want to be buying. So again, it's up to you how you, and then obviously you want to be collecting at another key level. I mean, you've got this one here. It's been once, it's been twice, it's been 3 times, 4 times, and then 5 times to finish. But you can even, this is obviously a key level. It's not been hit once all the way through, whereas this one has been hit like 5 times. So you can, when there's no imbalance, using smart money concepts, use the key levels, and you can target this, and that's a 6.5 risk to reward. I mean, you could, I don't know if you would want to, because that's a small enough thing for me. But you can just enter just above the 30. It did hit. It did hit, but whether you want to trade it, or whether you want to trade like that, just in case it doesn't open for you, that's up to you. And if you did want it to, if you did trade it like this one, it would have been in 9.2 risk to reward rather than a 6.8 or whatever it was. So this is just something that I am going to be adding. It's something I've traded already, but it's something I'm going to add now. Not now, but it's all ready to do. I've got all the info on it. It's all wrote down. It's ready to recite back to everybody else. This is what now I'm going to be implementing or showing people if they want. So obviously it's smart money, and then obviously this as your backup plan. And if your POIs fail, which I wouldn't have took this trade anyway, I wouldn't have took that trade because this there's no imbalance in this breaker structure. There's no imbalance in it, so I don't think I would have been taking that trade anyway. If there's no imbalance, then obviously there's smart money's not there. That's my rule. If there's no imbalances, there's no smart money. I mean, there's a minor tiny one here, but yeah, I don't think it's a big enough signal for me. So that's what I'm going to be doing. And you can see, obviously, when I do it all properly and give you all the rule sets, you'd be able to benefit off of this as well as the smart money concepts that I've done. And now let me just show you on that's ADA. Let me just have a look. I've been getting alerts all today. Look at this one. So as you can see, the key levels work. This is up-to-date price. So I had this marked out before I started this live stream, and obviously, I don't know. It's marked out anyway. So it's being done. So this is what I want to show you. It's here. I've been getting alerts for it all day. It's been, all my things have been going daft. All my coins. Let me just show you this, and then I will show. So this is what I got an alert for. I've got an alert here. Look, CTS. I've got an alert there. I've got an alert here. I have alerts here. I set alerts all over anything that I analyze or trade. But as you can see, I've been adding key levels all over. You can see they are hit quite often. Obviously, these are on the 4 hours, so they look should. But when you come down to 15 minutes, they're all like properly done. But I just want to show you of the key levels in the range. And let me just drop that to 15 minutes and you'll see exactly what. So I got an alert here that it had hit the POI. So obviously what I do when it hits the POI is on the higher time frame. Oh God, how do I do this now? 1 second. So I got this alert here. It's hit this POI. Obviously the alert's just gone off now, but I had it there. Or here. It's hit the POI. So then what I do then is I drop down to the 15 minutes and I look at the 15-minute structure. On the hourly, it's hit. So I'm dropping to the 15 minutes and looking for a 15-minute structure where it can break. And to me, the structure's miles away. It's not miles away, but it's too far away. I mean, which one of these are you going to pick? These aren't clear structure to me. That's the clearest structure to me. That's the clearest pullback into this wave, into this last high, lower high. That's the decent pullback. You know, you could count these maybe on a lower time frame. It'd be bigger. But for me, I'm looking for a clear path. I'm not looking to complicate anything more than it should be. Trading's hard enough as it is. Why do you want to complicate things? So, this is where I wouldn't know where I would want to be looking for. I'm looking for a breaker structure. Are you going to look there? That's the area that it's in. That's the area that it's in. That's why I have this marked out. Obviously, it's marked out with an hourly, but it's minutes. But it's failing to reach that. So you're missing out on this trade. This is when you're just using smart money. You're missing out on this trade. I'm going to show you it fails now. You're missing out on this because the like before when I showed you on the last bloody pair USD JPY, it failed to come to this area, and now obviously this is the area you want it to come to because this is the full you want to pull back into here at least if you're going to count this structure. For me, that's up there. That my structure's up there. You could take a punt at this when it comes. I mean, there's definitely candles there. Lower time frame, that will be a move. I mean, put it in 5 minutes, and you've got multiple candles there. You've got multiple there. They're not very clear. I think that's why I marked this full area out as a point of interest. And then obviously as well, what I did is this. You see this box here? This is the key level. This is one of the key levels I've marked. The reason I've got another box up there is just delete it for a second. If the POI is, I mean, if the key level is super small, if the key level is really small, and obviously 2.5 on a sheet is really small. So what I've been doing, what you do is, and it's an actual rule, you just double it up, cost, safety, or whatever. You just double it up. So that is like your level area. You've got your interest area. I'll show you now what happened. There's alerts for today. So just go back to the 50 minutes and show you. So now you've got you're in the downtrend of the minutes. This is obviously your buy on the hourly, downtrend on the breaker structure. So you want that to be up on the 50. It's down. It's down. You're just on a bearish move while you're coming down to. That's why you wait for the breaker structure on the 15 minutes. Then that means pullback wave on the hourly is over. So now you're back climbing on the hourly, and also break the structure on the 15 minutes. Your 15 and your hour is in the same, facing the same way. So now what happens here is you're waiting for this pullback. See, you're getting, like, all the time, every time, well, not every time, but more often than not, you know, you've got your areas in the right place. I've said this a few times, because when it touches, you're getting a rejection. Gone up, and that's a big candle, not as big as that, but that's a big candle for such a big move down. That's a pretty big candle to reply. Touches again, you've got a massive wick rejection again. Bullish candle. So you know you're in the right areas at that time with your analysis. So what happens is, touch again, massive candle again. So you're thinking, right, I'm in the right spot here. And then you see this, so you know the pullback's over. That's why you can draw your fib and you can look for this area. You know the pullback on this. The 15-minute pullback has started. So now you're waiting for a breaker structure, but obviously you're following price to see what happens. So this all is bullish. All this is one move bullish. So now the reason I've got this marked out is because I've already done this and had a go. I'll show you soon. So what happens here is you don't know this yet, but there you've got this. So you're thinking now, we've got these 3 candles here on the 15-minute time frame. So that's a push up. Is this price just going to pull to the 30 zone like normally? Is it going to just start ranging? Because you're expecting price to be hitting your POI and doing something like this. You know, and then you're getting a break, going up to get a breaker, this structure, to then enter on this leg or that leg for another pullback. So you're now thinking we've got 3 bearish. So all of a sudden you get that, and now you're thinking, right, well, this, I'm going to mark this out as a key level for the 15 minutes, which it is, but it's a small zone. So remember when I said you can double your zone up, just for safety. It's a small zone. Double it up for safety. Doubled it up there. This is a key level on the 15 minutes because you pulled straight up. You've had this move down to here, and you've had multiple rejections, and then this is a low, a new low. What's being put in on the 15 minutes, and you've got a pullback there, so you know this is a low. Just same as your hourly. You know when you've got these multiple candles, you know this is the lowest point. So as you can see, I've drawn the key level, and it covers this and up to this. So what you can be doing then is, so now we've got a key level here, I've got a key level here. We know they're both key levels because we've got a confirmed pullback, and on this we've got a confirmed high pullback. So, and I'll show you exactly what it does in a minute. So you can think about this, see what happens on this key level. You'd expect it to bounce, which you see all these wicks come straight up, imbalance, bounced off imbalance. Bearing in mind, you're still in your POI. You're still in, you've not closed below it, you've not broke it, you've not broke 15-minute structure. You have, but it's obviously a false breakout. So then you're just following this, bouncing off this breaker structure, CTS line. You're just following this all the way. And now you know, because you're bouncing this POI, I mean a key level here and a key level here and a POI. So you're ranging because you're in this, there's nothing going off. You're not breaking anything, you're not breaking this. You're wicking every time you get to this. You're in a POI, you're at a key level. All you want to do is expect price to go back up. You know, you're at a POI, you want price to fly up. And you can take your trades on, you can take the trades on the range each time until you break it. So this is so all the time, obviously you're waiting for this. You could wait days for it to come up to this area. You just really want to just keep going with your price. So every time you're hitting this range, you can see you hit it here. You can take longs. Show you exactly how it pans out. Every time it hits it, look, short, long, short, stop out, short, long, every time. Now you've got your breakout. You're nearly at your POI for a sell, and you're nearly at another key level there, which has been doubled up, same as this one. So this is all just as a backup plan, and obviously this one fails. Oh, obviously that one fails, and you hit your next key level up there, what's already marked out exactly like that. That's your breaker structure on the. So all this is just for while you're waiting for this, or if they fail, like this POI, like I said, this is an area, but remember when I said these aren't, I couldn't use these candles. I still marked it anyway to see what happened at that area, and obviously I've got my key level there, but also from this being broken, this low being broken, I've got this marked out as a key level, and this is my breaker structure on the 15 minutes. So you've had all this 15-minute action here, long and short, long and short, long and short, and you have had got an alert on this breaker structure line, but it's hit the key level because your smart money trade has failed. And what did I say? These are backup plans. The key levels are backup plans. And yeah, we're at price now. And obviously you can just, if you're following it, I didn't short it myself. You can easily short in that, and or at 30% or something, easily being shorting. Stop loss just above, take profit, but it's still running, so you don't know what you don't know. Choose to take your profit, where to take your profit. But obviously that's failed. The key levels hit. So it's up to you where you take your profits. But for me, now trading the key levels, for me, this is why I've got this as an alert as well. That an alert. I just alert everything up. But for me, for this trade, that's where I'd target just below. Or you could mark your key levels out again. Just depends how far you want to go with it. You could just mark your key level out, take profit here, this key level, this, and this. It's up to you. I would have stuck with, because what happens is when you're breaking your key levels, you normally come back to retest them. So yeah, that's what I am implementing now. See, that gets. I didn't take this trade, but showing you when your POIs fail, your key levels work. Or well, I'm not going to say they work because it's like false advertisement, but there's a great possibility. I've just showed you multiple options, multiple trades. So let me just put this on. You can all see my screen still. Where am I? 1 second. And here we go. That is the range I've just showed you. So key level, double key level, first one to loss, win, 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 loss, win, and then obviously the next one would have been a loss. So that is the power of the key levels when you catch it into a range like that, or this is the exact same strategy as this here. Can see, where am I? One. If you see here, this, they're the same. All them trades. So just as a side note, when you're waiting for this to come up here, always follow. I'm saying always because it might be a bit hard to implement, but I've got everything ready to show and everything ready to write down exactly as I have done in my previous course. Where this one, I've got everything ready like this in form again, just for literally the key level. Add this to you can add this breaker structure. Breaker structure. You can add this smart money concepts and key level together, or you can just use smart money concepts and key level separate. But when you combine them together, I've showed you multiple instances tonight that they work, and they work pretty good. See here yourself, they work decent, and I'm hoping that you would want me to do the same as I've done here again for this strategy, and you can add them together, see what you think. So now just going to mute my mic a minute. I'll be back in literally 1 second. I'll just look for my phone and look for something. can't. I've just clicked it on, but I can't actually find it. So let me just have a look. It will be a few trades on this. See, I'm missing out on. I missed out on a couple of trades. Well, these are my FOREX ones. I've had a couple of trades, decent ones. But obviously, as you can see, when smart money work, well, it's not failed neither. It just hasn't reached my area yet. Just trying to look for this. I've got an indicator what David started building, and I'm going to try and this is a trade I was in this week, Euro USD. I got in this last night. I know it looks a bit chart. Sorry about that. Let me just cancel that off. So obviously I've marked the full chart out. And starting on the daily, as you can see here again, this is a key level. This can be a key level setup. You can see them from miles off. I'm gonna quickly do it. So I use this key level strat pretty often. While you can use this key level strat pretty often. Works quite often and works more often. And that's a fail, that one. You can see the hold pretty good, but you're not getting a pull. You're in this for a smart money trade. You're in this for a smart money trade for price to back to this kind of area. You're waiting for price. You're waiting for price to come into this 61.8 from this big push up and this CTS. So you've got CTS here, US here. You're waiting for price to come up here, reach back down to here. Obviously, your high peak is here. That's obviously the key level then, because that's your highest peak. And then this is the lowest peak. I mean, you've got this little move here, but like I say, wick, still loads of selling pressure. Wicks on both sides. Massive down candle compared to these three. So you're not going to count that as a pullback. There's two here. This one starts as like a pin bar. Then you get all these wicks. This is a real low. You get these big candles pushing up, so you know that's a pullback. You don't get any other big candles like that in this area. So you can then mark that out as your, you can mark that out with wicks for key level. Obviously, this one would be your sell on buy. And then obviously you can just rinse and repeat. Obviously your POI is not turning up. It's not come back to your POI. Mark the range out. Remember, when it don't pull back to the 50, or it pulls back around the 30% mark, which is obviously just going through here, straight through here. If it's just hovering around this 30% mark, there's no point in trying to trade smart money in this area, because there's not enough pullback. Price will eventually, we've got big imbalances here. Price will eventually be pulled back into this area, and this will more than likely have some sort of reaction. So obviously, when your POIs are failing, your key level strategy, and obviously it works more. You've got this break of this key level here, so then your next key level area is going. Next key level area, and you just follow it. You just rinse and repeat the areas until you get in a pullback into your 61. While you're waiting, you still can gain off of these areas. You're still waiting for this pullback into these 61.8. Again, this is a high point. This one's not broke. This one's not. That's your low point from this break. That's your high point from the break. You're waiting for the break of that high. Waiting for a break of that high. Well, it won't be a break, it's a CTS, obviously. Actually, you're waiting for this to continue because that's the last high it's put on. And now, obviously, this is your new break of structure. So you're waiting for that to be broken. So you're waiting for that to be broken. You've already marked this key level. So that's the last low it put in. This is the last high it put in, the wicks. So what you're going to do then is, oh yeah. So you've got, so what happens with this one, with this pattern, you've got the big pull up, and then you've got wick and a wick, and then you've got this little pull down, one little candle, but then you've got a massive one. So this pattern, and there's actually patterns for it. So wicks in, you can trade into these areas. Weren't guaranteed every time, but see where I'm coming from while you or your smart money to play out, get in every time. So let's have a look here. So now you've broke CTS. See, so you've got now your C. So just this without lowering the time frame. Lowering the time frames. One would be your it can be your POI 15 minutes, but could be a key level as well because you've got pullback and then that's it's your last point there. But however you're going to play it. But like I say, the key level strats are pretty decent. You can mark them out really, really easily. It's just different ways to mark different. So this was the trade I was in. Originally, I wanted to target this area. The reason I did have that as a target at first, but I pulled myself out of the trade at this. So to there. The reason I did this, actually, from this move up, continued the structure on the 4 hour. Don't forget we're on 15 minutes. Continued the structure. It were a CTS on the 4 hour. Obviously it was CTS on the hour as well. The hours here, the 4 hours up here. Obviously I marked this out from a daily time frame. That's how I charted up. Well, that's how I do chart. And then obviously I found this on the hourly as my POI. It don't look like it is because we're not in the hourly chart time frame, but this is definitely a POI. It's hit it there. So then I've set an alert on the 15 minutes. Look, the last high that was in before we hit the POI, and then obviously it broke it there. Then I found I found this on the 10 minutes, I believe, 5 minutes. one or the other. There we are. Couldn't find one on the 15 minutes candle, but I found this one right here on the 5 minutes and set a limit order at exactly just above the 30. You can see just above the 30. Put me in. My original target was up here, but if you see what I mean about waiting a long time for these to come out, for these smart money trades to pop off, and sometimes you wait that long, and sometimes you wait long and it just bounces straight through it, and there's no, you can't help that. Whereas if you would have joined in on this POI, a bit more risky. I like to always wait for the lower time frame POI. You could have easily joined in 30% of that market. I mean 30% of that POI. Stop loss just below. You see the line here. Stop below it, and you can target. This is now the CTS. That's what I was targeting in the first place. I could have targeted CTS. You would have got a decent trade, but if you look at the difference, the risk to reward on that, when you're taking the hourly POI, and it's more risky because you're not certain something's happened yet, or it's not, your time frames aren't all adding up. Like your hourly will be bullish and your 50 it'll be bearish. So this is a 6.29 risk to reward. This is a 10.7 risk to reward. So you can wait for the 15 minutes, and obviously if it hits the target that you're aiming for in the first place, you're going to be gaining, getting a better risk to reward and a smaller stop loss. The reason I exited this trade was because put it back on 15 minutes. That's what. Yeah, this is what I did. So I was in the trade here, putting the trade there. Stop loss was a 0.06. The reason I stopped it is because I was following this. Wasn't what this is the structure. You see this red line that I drew in. This is the 15-minute structure, how I marked it. And obviously, remember, I say, like, I don't count any of this as any kind of structure. 1, 2, 3, 4. Definitely a valid pullback. This is where I implemented this. It's in blue still, but this is where I made this key level bull on the 50. So, as you notice, this is why this key level strat works decently with the smart one concept, and it's just the same kind of thing. When it's hitting the key levels, you're getting wicks rejection, multiple rejection, eventually down. So what I did then was I moved when I spotted this pullback, and then these two candles, 15-minute time frame, which I was watching the trade in. I then put my stop loss here into profit, and obviously because I thought this was going to hold this this key level 15 minutes, which they do a lot of the times. I mean, there's another way I've got with it, which is a safety candle, but a lot of the times your stop losses are pretty much far, because if you've got a candle, if the candle comes down to here, you'll be using bottom of this, and you're losing quite a bit more. It still works quite often, but not. So yeah, I was in this trade and I got out there, but it was still a 4.9 risk, around a 4.8 or something risk to reward, which I'm not grumbling at. I did want it to go up to there, but as you can see, implementing the key level strategy for potential stop losses, take profits, key levels like instead of targeting the CTS there, you could have seen this, these multiple candles here, and this is just how this key level strategy works. You could have looked at targeting just the key level like this, and as you can see, it's gone down, it's tested the key level. It's only 15 minutes, like the higher the time frame key level, the stronger it is, obviously. But you can see they still have good reactions. There's one hit, there's two hits, never closed above it, did wick above it, didn't close below it. And there's three hit, wick, 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 and straight down. So you can see there is weight in the key level strategy, and that's why I am implementing it. I could trade more chance of getting better entries. I've got more chance of being able to visualize my trades more. Obviously, like mark this out as a key level, and instead of targeting the CTS line, you can target it, but it makes more sense to set it just below the key level there. It makes more sense to take profit at key level. Same as when we had this pullback, we made this bullish key level. Now, if this would have holded like this one, when it's bounced off a few times, and like all the other key levels that I've showed you, it just bounces off of the area. If this would have holded and it bounced straight off, obviously it went straight through, then it would have been a perfect little trade, perfect setup, because obviously this key level, I've holded it. I mean, it's holded my thing, and I've implemented this in with smart money, and you can see why it can be pretty powerful to add this sort of strategy to into your smart money as well, or however you're trading. And just have a look on some other trades. So where I'll just go over a couple of trades I had. This one, we start on a really good one here. I didn't miss out. I actually took the trade. It was a loss. And targeted breaker structure. As you can see, again, just delete this one. As you can see, again, I marked out a key level on the hourly, an hourly key level, and look at the wick when it hits it. So obviously, you know, there's pretty much quite a bit of weight there. And then again, we've hit it, we've started pulling back. Again, you get another key level here. It's just, this is why I'm adding it, because this strategy will be amazing with this key level strategy, should I say, combined with smart money concepts, will be dynamite, I think. So each time, head structure line every time. So don't forget there's a key level here as well. So there's a key level all the way across here, but obviously we're in the 15-minute time frame, so this doesn't look apparent. But if you look here, this is your highest up candle. I know you can't see it very well because I can't. This is your highest up candle. Obviously you've got all your wicks here, so this cost us all the wicks. Just mark all the wicks. This key, all the wicks. Just put, and as you can see, you constantly you're in a you just, if you didn't get stopped out of this trade, obviously you would have been in that trade, but because we've got stopped out, you then watching your you're watching your entry, and if you're just using smart money concepts, you're going to have to work again, mark out and wait again for things to hit a POI and that to hit a POI and then to get a break of structure. You're going to have to wait again. But whereas this, I got stopped out, and obviously you've got it's gone back in the favor. So you're like, normally a lot of people are like, shit, it's hit me target after it stopped me out by pence or whatever. But then you get a new low put in, a new high and new low, hit your target, what you was aiming for in the first place. But you're marking out your key levels all the way through. Comes and your smart money hits. But while you're waiting, you can trade these key levels pretty much quite often. You're gonna have a bit more. You're gonna have a bit more of a trading, and it holds pretty well. This strategy holds really well. So just quickly run these across the board. See, that's a loss. I'm not going to try and say, yeah, it's a win. This would have won. This would not. I'm literally telling you exactly what I'm going to be trading like and what I'm going to be showing. And if people want me to do the course exactly like I have done my SMC one, do it. You can see that you can have these trades, and obviously on your crypto, you're gonna have bigger gains, or this is because we're on FOREX. The prices are not very big, and depending on the time frame you're using, that will obviously also depend on the percentage that you're getting or the size of the moves that you're getting. I mean, look, this trade's knocked me out. I didn't do these, by the way, these trades here. I just literally try and just leave on the trades that I've done, or the trades that I've won, or the trades that I've lost. I'm not going to sit there and say, yeah, I took this, I took that, and I took this, because I didn't. I'm not bothered. Even if I see stuff that I've missed, or even if I get stopped out of these, it does not bother me in the slightest. I've no problem about missing trades or being stopped out. It doesn't interest me. I'm not bothered. It doesn't send emotions into me. I just wait for the next setup. But why wait for another setup like this to have to wait? Most week or over a week for it to hit, to stop you out by a couple of dollars, or not even a couple of dollars. It's literally a couple of cents. Why wait for a setup like this? I know there's lots of coins you can do, and you can do it on multiple coins, and you can get multiple trades a week. But imagine if you only traded like 3 coins, and this happened on all 3 coins or all 3 pairs. You're gonna have to wait probably another week for another trade to happen. Whereas if I would have traded this at this time, I did have it marked out. Obviously, you can see I have all the key levels and stuff marked out. And obviously, look at like I say, the hourly has obviously got more weight. You see the key level here, what I've marked out. Obviously, you see how many times it hits it and comes straight down. Hit it there, hit it there. It has more. The higher the time frame, the stronger the signal, or however. But yeah. So future, this is what I'm going to be implementing. I've already traded it, but not in with SMC. I've traded like quite a few strats. I love trading stuff. I love like trying to figure things out and stuff like that. So I mean, this is really good for what I've decided to. Like I say, there's a full strategy within this thing. So just see how Oh, Apple. I was literally target. It was a higher time frame. It was a high time frame, and I tried targeting this. POI. Stopped. I moved my stop loss in when it went down here. Then it dropped to this one. I moved my stop loss to here, so I got stopped out. Come back up. So, but I have had a few good trades. Most of my trades I've been on, but I've just deleted every single trade I've put on this chart. All my trades have been on USD CAD week. Well, most of them. I deleted it because I wanted to. I was going to use this chart to analyze, show everybody things, but time to work anything out on this chart. Get this though. Working on before I got. This is for the. So this is the indicator. This is how I mark out. This is without the key leveling. For now, this is the strat that I'm on about using. Obviously, I've put. This is just how I am looking at. Second, let me. Easier. This is just how I am looking at the market. Marking out. Obviously, I want an indicator that does all this, marks out the Y's and stuff. Eventually marks out the key level, but look how many times the key level every time it holds. So obviously the powerful area. So the indicator, there's quite a bit of work to do on it. So this is how I have been marking out. This is what I mark out every time you get every time you mark your BOS out, you mark your CTS. If you're not CTS in, you BOS in. So BOS, I'm wanting 2 candle closes above it, and not to count a range that does all this. If it does this, then three candles, or it's got multiples like this, I'll count them as a pullback, or I'll count them as a break. Or so if they do all this messing about, these wicks on either side, indecisions, I don't count that as anything. That don't look. I don't write that structure. That's why I have wrote CTS. That's the BOS. Obviously, I don't say this is broke structure until it goes up here. I see multiple closes where how I'm marking. Now, what I did tonight is I set the indicator off, indicator on, but you can see there's quite a bit going off. So what I do is to go all the way down here, down now. All these are intertwined. So well, as you can see, this is my POI. Obviously, David has coded, and it's caught one exactly as well. Not exactly. Well, it has actually, because there's one here, and then there's another one here. But you can see his row is it's in little writing POI, and this is my exact POI. This is David's first one. Then his next one, he's got the POI right here. Is also the POI is right here, but I've noticed the only thing a problem with it at the minute is the BOSs. Some of them are marked up wrong. I had some code before the BOSs. I mean, this one's bang on. This is my CTS on the hour. That's David's CTS, what he's coded. Some of them are bang on, but some of them I've checked it over multiple coins. Some of them aren't. Some of these POIs, they are marked out on candles that I wouldn't use. That's why I haven't got this one is marked out where I would use on. And obviously I'd like the lines to be plotted like this, where I'm plotting them, so I've got a visual straight away instead of waiting for it. The indicator out is it has got potential. Obviously, you can see here it's marking out the same exact stuff as I would mark out POIs, but not everything is like I would do it. So obviously we need some work. So see, like here, this on David's indicator, that's not a breaker structure to me. I wouldn't even, it says 2 candle closes on the indicator, but it's something we're going to have to work across, because I do use that as a breaker structure, but it's not. That's not valid to me. But you can see it. I mean, I have to draw it, but I leave it if I'm not showing somebody, because it's not valid, broken. And sometimes the breaker structures are in the wrong place. But I think this was some kind of code I would do. I sent across, whereas just take this one for instance. That to me, that's the breaker. That's the real break there. So when I get some time, I can go over it with David, and we can just work a few things out. Just happy that there is, and like you can see here as well. This is marked out. It's marked out pretty good actually. It's gone. Oh, it must be. I must have that setting on. I'm traveling along looking for end at box, but as you can see, this has been marked out as obviously an hourly POI, which it is. It is because, but look at the candle it's chosen. So maybe if we would have gone to here, let's just rewind it back. That's the candle it's chosen. I mean, for me, obviously we've got to put some new rules and that into it. For me, you drop down time. I drop down time frames to find the best candle I can, whereas now that to me is the candle that I would choose. I know it's pretty much the same, but there's just some instances where it marks out a candle that's not, I wouldn't specify as a candle to use. So that can obviously be all coded, but as far as an indicator goes, I'm glad to see it. Oh Jesus!
Started.
1 minute. Pardon?
Started. It's
yeah, I'm just glad to see it, mate. Yeah, but like I say, like some of them you've marked. Some of them, like this one here.
Yeah.
This is why I literally highlighted this area with the blue lines, because I know like this area is an exact point I marked. What I did first is I literally I just put it on. I didn't turn it on. I just literally marked all these BOSs out. I just thought I'll just put it on now. And I also had a mess about with all your other strats as well. There's loads. It's been ages since I've been on strats, but I just marked all this out as I would see it in my eyes, or in this strat ways, as best as I could. And then I could only literally find one area there that that was viable. There was nothing there on that one,
Yep.
so obviously I didn't mark note out. I just marked this out as a zone. I think that was zone I marked or something. But the actual indicator after I did this, just flicked it back on and see how it married up with my see how it married up, and I was surprised that this one just literally landed perfectly where I went. But I have got a few like suggestions, but obviously it's a bit late tonight to tell you more because I could sit for hours, me.
No problem whatsoever.
I think a good one would be to start off with is just to pull the compression is integrated with these green candles as well, into it, and red candles. So I think just if you could just pull the compression away, just for the time being, just so we can get this all sorted and marked up. It'll be a step, but I'll write down tomorrow, and I'll send you a list of the stuff inside the strat, or we can talk over it, because some of them I don't know what colours they are, and I can't. I'm not really good at reading. I'm not really good at reading. I'll show you now. I'm not really good. I don't understand everything.
I totally understand. Yeah, totally understand.
All these.
I've fixed a couple of problems this morning. One of them that you just mentioned was the bearish BOSs. I fixed that this morning, sorry. So I'll be updating it for you tomorrow, because I did notice that the red ones were there was a bug on that. So hopefully that'll help to mark them out a bit better. And I've been watching obviously from the beginning tonight, and I'll try and code a little bit more for tomorrow morning and send you an update for some of that, and then hopefully we'll be able to continue building on it together.
Yeah, man, that's brilliant. Absolutely brilliant.
We'll make the best indicator on TradingView.
Do you think you'd be able to make one on the key levels as well?
The biggest problem I'm going to have is because, as you can see, when you're on an hour going a higher time frame, the order blocks show up quite well. When it's going the other way around, when you're looking for a lower time frame, they don't show up as well. That's the biggest problem I've got at the moment. But other than that, key levels and all that, no problem. We'll have no problem with that.
I mean, this one looks like it's marked out. All right. Do you know what? Quite a few of them. Obviously, there's imbalance in this one, imbalance in that one. Yeah. So, and I've turned the imbalance off for now. But obviously, you see this one here. Obviously, this to me, I wouldn't. I'm not like thingy. But for me, this candle here, I wouldn't be thinking about that one. I would just be lowering time frame then, to get a better candle. But I mean, as an area, it's pretty much. I mean, look at the you're getting the rejection candle. You're getting rejection wicks when it's hitting the area. So obviously, it's in the kind of area that you need it to be in. I think just with a few tweaks and that, it'll be a lot better.
Yeah. I'm glad that I finally got you some code across so we can work on together. So, like I said, next week I'll be on pretty much daily on the live streams, working on an indicator. So hopefully we'll be able to work on it as well.
Fine, anyway. But and if anyone's got any questions, I'd answer them. Or is there any messages, David? Because I'm on full screen here. I've only got one screen. I'm using my laptop's crap.
I can't either because I'm streaming. Is any?
All right, 2 minutes. I'll have a look.
Sorry. There, cool.
Questions that we've got from by this. If your trading scope smart money double confirmation on 1 hour and 15 and boss CTS don't get breaking and POI files to get filled. Can you hear me all right?
Yeah.
Is that when we go into key level mode?
Right. Let me just. I'm just reading it. I'm just reading it as we speak. Let me just read them both quick. It's just put Lottle, you've already answered both my questions. Cheers, Scope. I do a good job of chatting crap. I'm not saying crap, but I do a good job of when I start something, I know exactly where to go with it, and just to explain it well, because I know there'll be questions. I'd have quite a few questions in my head, and if they get answered while in video, answered. But yeah, I'll just quickly give you a quick show about what I mean. You'll know from the answer. I've answered it already, but
Bias did know afterwards that you have answered both of his questions.
Yeah. What have I done here? Well, I don't know what I've done here. So, obviously, if you're, just say you're in this market, I'll just do it quickly because I could rabbit on for a month. So just say you're in this market here. You've got like your structure. Your structure is like this. Your structure's like that. See, there's no imbalance in this push up. There's no imbalance, even though there's a big candle here, there's no imbalance in it. So then when there's no imbalance in the area, this is just a quick one. Don't take this as like a finished product. And so you use this candle and the wicks for a key level. There's no imbalance in the wave. You use key levels or break a structure. So obviously this is the structure high, so you're waiting for that to be broken. You're waiting for that. This is obviously an uptrend, so this is going to be a CTS line, and then obviously if it breaks down, that's going to be your BOS line. And if you notice from my last stream, and I spoke about key levels, it's just a bit like order blocks, but there is more to it than you think. So if there's no imbalance, you use key levels. I mean, you can see that they work pretty often. All these wicks here, obviously, when you go to mark out, there's different rules for marking different key levels out, and I've got them all wrote down. But you can see when they get broken, become resistance. But obviously with all the wicks, you just mark all the wicks out. It just depends what you are. But if there's no imbalance in the waves, that means you can't smart money trade, because there's imbalance here, here, and here. But the imbalance is being filled by this. And if you go back to my course, you'll see if there's no imbalance in the wave, you either skip the trade, or you use key levels, or you use the breaker structure and key levels, or your order, like it's kind of an order block. Obviously that's how you're trading it. And as you can see, it's got quite a bit of weight to it. It's all over everywhere you look. I mean, this can hold. It's held all the way through it. I mean, you've had wicks below it and stuff like that, but it's held, and you can keep updating the key levels as you're going along. They're just everywhere. So, like I say, no imbalance. There's a big one. Well, this is a 4-hour one. Look, you can see how well they hold. So all you're waiting for is them to be broken, or you can use these as shorts and use obviously the bottoms as you look. And see, there's quite a bit of weight in every time they get hit. Obviously, you get your stop out. You're going to get that quite often, whatever you trade, however you trade. But you can see that there's quite a bit of weight in it. There's no imbalance. That's when you use your key level strategy. Even though you're following smart money, even if there is imbalance, like in this wave, there's imbalance in this wave. So you would be looking for an institutional candle because there's imbalance. So you know there's smart money there, and it's pushing the price up. But that could just be pushing the price into this into this area here, because this is a nice move down. So that could just be pushing price up. And see here, there's a candle. It's not a candle I would use, but there's a candle there. It's in the 61.8 area. obviously this is smart money just pushing price up. So there is smart money in this market, but when there's not and there's wicks like that, just leave it out. So while you're following smart money, always mark out key levels as well, because if the POI fails like that, it goes there, and then fails, it'll more than likely hit your key level, and you're going to have a reaction from your key level, because don't forget, you've got your key level and you've got your breaker structure. So if it doesn't have a reaction at your key level, if your POI fails, even though there's smart money in market because there's imbalances, if the POI fails, you've got a key level as backup, and if that fails, then obviously you're breaking structure, breaking this line, and then you're reanalyzing, because then you're going to expect price to pull back into this area again, key level, or you expect price to have a pullback to retest the key level, the breaker structure line, or come down to the 61.8. There's a candle there, then push back up. So it's all valid. Use every bit of said and showed you where it does. So yeah, no, I've already answered your question. Apply there just so you get the gist of it faster. But thanks for being on stream again, Abides. Thanks for all your and thanks for everyone else's messages. Just want to quickly, before I go, because this has gone on a lot longer than I thought. I ain't got nowhere to be like, but I just want to show what how people are getting on with the strats and the chat we've been doing. We've got Yorkshire Rippler. He's doing well. He's added a couple of rules to his. I won't say rules. He's just added a bit more to his, because all these rules aren't set in stone. You don't have to do it like this. Everybody's got their own trading style. You got Bizio. Bizio's getting busy. ESL's done really well today. He's got an 8.6% win with 11R. And another trade here, 10.2R. You've got quite a few people who are getting decent results. I mean, yesterday he got something like 30R yesterday. What's this one? That's only a 10. But yeah, with Yorkshire Rippler, he got a 30R yesterday. There it is. Absolutely beasted it. Brilliant trade. People are making some decent gains on this, and they just learned it. That's all they've done. They've learned it, took the time to study it, and tried it and done it. I'm so happy that people are making decent trades and getting some good money. I'm happy as oak for them. So, right, anyway, guys, that's all from me. I'll just quickly check general. It's off of David, maybe. You in it? Yeah, it's off of you. Yeah, so, anyway.
Hold on.
Like I say.
Thank you very much, Scope. Can you hear me? Yeah, I think you can, yes.
Yeah, I can hear you now, yeah.
Thank you very much, Scope. It was a brilliant stream once again, and congratulations on all the great work that you've done, and all of the results that you're getting for everybody. It's fantastic.
Yeah, and if anybody wants me to start doing the levels, or wants to chat about the key levels, just come into Scope's chat and I'll do it. I'll chat about it, and if you want me to set it up, I'll set it up. 1 second. just this quick one from ESL. I just put, I don't even know you, mate, and I'm so happy for you. I just put, honestly, every time this happens, I always think, thank you for this, mate. So you can see it's doing people well, it's doing people good. So I mean,
very good.
just me trying to help people out. But yeah, thanks
pressure.
for coming. Any questions? Let me know.
Thanks, mate. Have a nice evening.
No worries.
2.5 hours, mate.
I need a cup.
2.5 hours.
Oh,
Yeah.
Jesus.
Right. Yeah, man.
On the-
Thanks for coming.
Cheers, mate. Have a nice evening. Bye bye.
See you later. Bye.